Hi, I'm Shashank Bhargav, and you're listening to Three Things, the Indian Express news show. Since the 2020 budget was announced on Saturday, we have been doing segments about various aspects of it. We began by taking an overview of it on Monday and talked about to what extent it will boost the economy. After that, we discussed whether NRIs will be taxed differently, how the new income tax regime will affect your savings, and why the central government has decided to divest a part of its stake in LIC. In this episode, we will talk about two other aspects of it. We will talk about the increase in defense pensions and how it affects the military and the economy. We will also talk about in what ways the budget failed to address the problems of the rural economy. But first, we talk about the Reserve Bank of India. Yesterday, the RBI released its latest monetary policy review. And while the main element of the review, the repo rate, remained unchanged, the RBI came out with a series of innovative policies in an effort to turn around the economy. In this segment, Udit Misra, who writes on the economy for the Indian Express, talks about why this set of policies could be game-changing. So, Udit, yesterday, the latest monetary policy review was unveiled. The main thing about the review, which is supposed to be the repo rate, that did not change. In your piece, you point out that the retail inflation has been at 7.35%, which is high, so they could not have decreased the repo rate. You also mentioned that this inflation is being mostly seen as transient, so they could not have increased it either, which is what happened. And this is something that the governor, Shaktikanta Das, also acknowledged. And yes, while the repo rate did not change, the RBI did reveal a long list of policies to boost the economy, which you believe could be game-changing. Could you talk about these policies and the kind of impact you think they will have?
Right. So it is true that on the face of it, nothing seems to have happened. A lot of people have fallen for those headlines. But in my own understanding, in the last 4 or 5 years that I have looked at monetary policy this closely, I do not remember a monetary policy which was this innovative and which really had so much vision and imagination behind it. It is in the true sense a credit policy. Typically, what has happened is that ever since the Monetary Policy Committee came into being, which had 3 members nominated by the government and 3 members from the RBI, it has become a very staid affair. People vote or are unanimous, repo rates are cut or increased or whatever, and it's become a boring affair at one level. This time, because the situation was so tough, I would say that Governor Das and his RBI team has really risen to the occasion. And the first thought that came into my mind was that Governor Das has done a Mahendra Singh Dhoni. He's basically taken the game, or at least what he's trying to do is to take the game deeper, longer, and see whether he can win it in the last over and not lose it straight away. Let me get to the specifics of this. What he's done is that, yes, on the face of it, he could not have changed repo, which is essentially the rate at which banks borrow from the RBI. But what he could do and what he has done is that he could change the extent to which he can provide repo. So one of the key things that he has done, and for this he didn't need the Monetary Policy Committee or any other approval, he said that we'll do 1 year and 3-year repos. Now, you have to understand what is a repo. Repo is basically when a bank goes to the central bank and says, give me X amount of money. And these are overnight transactions. So the bank says, give it to me today, I'll give it to you tomorrow. And the rates are set. The rates are repo and reverse repo. Now, what the governor has said is that I'll do 1 year repo, which is to say, you take it from me now, return to me 1 year later, or take it from me now and give it to me 3 years later. How does that change? For a while now, it has been the case that RBI has been cutting rates. Last whole year, successively, RBI cut rates. We sat here discussing how interest rates in the economy never fell, even though the repo rates fell.
The banks were not passing the interest
on that. Yeah. So monetary policy transition was not happening. Now, the problem with that was that most banks said that, listen, I take only a very small portion of my funds from the RBI. So even if the rate falls on that portion of RBI of my funds, my overall cost of funds remains high because I'm stuck in the high cost loans. I've already taken loans and I've already borrowed money at a very high cost, and I'm in that economy. What the RBI has done today is that it has done that 1 year and 3 year repo, and it has done it to the extent of 1 lakh crores. That is the amount of money that it has allocated. It's still not such a big amount, honestly. But it is a big enough amount to give a great signal and to at least push a lot of funding. Why? Imagine there was only one bank. So the bank can go to RBI and say, okay, give me 1 lakh crore. I will pay it back to you in 3 years' time. So now the bank has 1 lakh crore at 5.15%, right? So as of now, you and I pay somewhere between 8 to maybe 13, 14% on different types of loans. But here is a bank which is getting 1 lakh crores at 5.15%. Imagine if it was to put some markup, but even so, give the loan at, 6%, 7%, 7.5%, I don't know. But there'll be a substantial decline in the overall interest rate of the new loans. Now that immediately makes a lot of funds, a lot of projects viable because the capital is coming cheaper and so the project is more viable. That's the key big decision.
This is actually what was supposed to happen in previous repo rate cuts, but did not happen.
It didn't happen because repo rate was a overnight thing, and secondly, repos were very small amount of money was involved. Other than the repo, which is a huge thing and very imaginative, other than that, what the RBI has done is that it has held back the CRR requirements for lending to certain key sectors of the economy. So what is CRR? CRR is cash reserve ratio. Cash reserve ratio is basically saying that to a bank, RBI says, whatever you may hold, I will keep a certain portion of it. You'll have to keep it with me. That's like a security, Now, every time the RBI wants to push for lending, it reduces the CRR because the lower the CRR, the more funds available for the banks to lend further. And in times of high inflation, generally the RBI raises CRR, right? So that the money, not more money is created, not more lending is done, and you pull back the money. What RBI has done today is quite contrary to what it typically does in a high inflation system.
Is it because it's seeing, again, the inflation to be transient?
Yes, exactly. That is one. So it has finally said that, listen, this inflation will come and go, but I need to take care of certain sectors of the economy where lending must happen, and it should happen in the next 3 to 6 months. So it has said that if you give loans between now and July or whatever, all the incremental lending to, say, loans for automobiles, so the loans that you might take for your own car, for housing, or for MSMEs when they ask for loans, retail loans, if banks give those things, they don't have to hold on to the CRR number, right? They can be exempt from that. Now, this is a huge thing because all of a sudden, the banks have more money. Again, this is a very imaginative solution, because you've not cut CRR. You've just held it back for certain sectors. So it's very directed, focused attack at what is the problem.
So in both these senses, the banks have more money and eventually people have more money.
And similarly, there have been greater leniency shown to loans which are apparently going bad, are turning NPAs in MSMEs, in commercial real estate and stuff. And RBI has said, no worries, we'll push it forward. We'll give you a 1-year extension, right? We'll see you are allowed to do some restructuring. We'll see it next year. Now, what that does is that, what is that assessment? That is assessment that the broader economy has turned negative and it is bringing down a lot of projects which may not be failing just because they are either crooks or they are fundamentally flawed models. They may be failing because the broader economy is failing and then there's credit crunch. So they've said that, this is what I said, the Dhoni touch, that, just let it survive for another year, give it another 6 months, give it another round of funding, and let's see where we are. This is called regulatory forbearance, that, okay, I'll be tolerant right now, even though you are defaulting, but I will just look the other way. You carry on. Let's see where it goes.
Instead of them turning into NPAs, which is...
If they turn NPAs, who gains at one level? They turn NPAs, you can sell the thing, but who's going to buy in this market? Who's going to get any money? Nobody's going to get. The commercial real estate or the MSME will be down. This is exactly what I'm saying. It's the art of the possible. This is exactly the kind of approach that many expected Nirmala Sitharaman, the finance minister, to have for her budget. But RBI governor has shown tremendous imagination and innovation in policy making. And there was one sentence that he said that in the very beginning, where he said that, I know that the markets have already discounted the no change in the repo rate, but you can never discount the Reserve Bank of India. And that statement will go down in history as one of the very strong statements about what RBI can do on the day it decides to do it.
Is there a lot of gamble involved in this?
There is a gamble involved in it. Yes, of course.
Because all of this, a lot of this assume that, hey, this inflation, it'll go away.
Definitely. Every time you bring down prudential norms, there is a gamble involved in it. But you have to see it again as what we can do. It's a very can-do approach. Let's see what we can do. Let's have a result-oriented frame. At least he's trying to do something. And yes, things can go bad if these bets don't take off. But there's a very good chance that if these bets do take off, then things will improve. And that's the kind of hope and agility we need in policy making at this current juncture of the economy.
Next, we talk about defense pensions. Over the years, defense pensions have been increasing. This time in the budget, around 1,33,000 crore rupees were allocated to it. To put things in perspective, the government is spending less on both education and on health compared to these pensions. In this segment, Sushant Singh, Indian Express's deputy editor, joins us to talk about what has led to its increase and how it affects the military. Sushant, you point out that the money that has been allocated to defense pensions has increased by 10.5 times in a decade and a half. This time around, 1,33,000 crore has been allocated to it. This is obviously a huge number. Could you first talk about how does this compare to other programs and projects that the government spends on?
See, just to give you an idea, the total money that Pakistan spends on its defense, including its defense pension, is less than what India spends alone on defense pensions. Pakistan is our biggest adversary, and Pakistan spends less on its overall defense than we spend on defense pensions. That should give you an idea. Individually, it is more than NREGA. It is more than double that of NREGA. The Swachh Bharat scheme has some 10,000 crores. The health budget is some 90,000 crores. The education budget is some 90,000 crores. Health budget is some 66,000 crores. So the defense pensions, perhaps to my mind, has more expenditure than anything else that deals with development sector or any other such sector. Now, the important thing to remember is that defense pensions by themselves are not a productive investment. When you invest in education, when you invest in health, when you invest in cleanliness, or when you invest in rural employment guarantee scheme, you are actually investing in society, you are investing in development, and the fruits of those are seen in decades and years to come. In terms of defense pensions, it is almost, as the Supreme Court had once said, pensions are delayed salaries in that sense, that because somebody served for 20 years in the army or 18 years in the case of a Jawan, he has to be paid over a period of time as a form of social security, as a form of some kind of assurance that having given his youth for the country, he'll be looked after by the government.
So what exactly has led to this rise, and what kind of problems does this end up causing?
There are two things which have led to its rise. One is the simple fact that the soldiers retire at a pretty young age. Most of the Jawans would retire at the age of 35, 37 years of age. And the life expectancy in India has continued to increase. People now live around 70, 75 years. So you are, for every serving personnel, you actually have 1.7 times the retired military personnel, which is reverse in the case of civilian employees. There is a 0.6 retired civilian employee to every serving civilian employee. The ratio of 1.7 to 1 is increasing by the day because Jawans retire early, soldiers retire early, and they continue to live far longer. Secondly, because of the various pay commissions and the one rank, one pension scheme, which Mr. Modi's government approved in 2015, the pension scheme or the amount for the pensions has increased dramatically and is continuing to increase by the day. It is the spike in defense pensions which is taking place that is really worrisome. Every financial year, it is increasing by some 15, 16, 18,000 crores, which is like a huge number.
What kind of reforms have we seen being proposed in this regard? Like you mentioned, early retirement being a major contributor. Have there been any talks about, say, increasing the period that one serves?
So far, officially, there's been nothing which has been done, although the parliamentary standing committees have spoken about retired military personnel being taken into paramilitary forces. For over last 2.5 decades, this has been proposed, but that has been shot down by the paramilitary forces as they also want to stay young. They do not want older people. General Rawat, when I met him a couple of days back, the Chief of Defence Staff, General Bipin Rawat, he had spoken about if at least one third of the army could continue to serve far longer till the age of 58, while the rest of the army continues to remain young, to bring it down. In the case of civilians, during Mr. Vajpayee's government, the assured pension scheme which the government gives was removed and was replaced by a contributory pension scheme. So civilian employees in India since the early 2000s only contribute to their pension and get what they've contributed. But military personnel continue to be guaranteed a pension by the government. That reform eventually, I think, will have to be brought in defense pensions if defense pensions have to be controlled.
Previously on the podcast, you've mentioned that the defense spending is on an all-time low. And so much of the money being allocated to pensions and, operating expenses, in what way does it affect the army and the army personnel?
See, the simple fact is that the biggest impact, one is the larger economic effect of the spending on defense pensions. As we just discussed, it is in some ways unproductive, and it is in some ways impinging on money that should be ideally be spent on development or infrastructure development or health or education or any of those pressing requirements that a poor country like India has. The second impact is on the defense service itself. If the overall pie that can be allocated to defense is not increasing and the larger share of it is going to defense pensions, then the defense services are not getting modernized. The process of military modernization takes a backseat. It is not getting modernized fast enough, and the vintage equipment that the Indian Armed Forces have is increasing by the day. So it's a double whammy. The military doesn't get modernized, and the larger overall economy and the society suffers because money is not being directed towards more productive needs.
In the end, we talk about the rural economy. This budget, in many ways, did not quite address the problems and the distresses of the rural sector. Harish Damodaran, Indian Express's rural affairs editor, talks about what stood out for him during this year's announcements.
Actually, strangely, nothing much was done in the budget. You don't see any coherent vision or anything of that kind, whether it is in terms of subsidies. Like, for example, you find that the subsidy on fertilizers has actually been cut compared to last year. Okay, it's about 10,000 crore less. But then there's no announcement of any increase in urea prices or anything of that kind. Same is the case with food subsidy. The food subsidy bill in the revised estimates is about something like 90,000 crore less than what was in the budget estimates. So a lot of things are hidden. It's not clear how are they cutting the subsidies, because you're not announced any increase in urea prices. You're not announced any increase in the issue prices of wheat or rice, which is distributed through the public distribution system. And you have not said whether you will freeze minimum support prices or whether you will rationalize procurement of wheat and paddy. So it's not clear, you don't get a full feeling of what they intend to do. So probably you might see a lot of things happening in the off budget kind of a thing, So maybe the budget is not the place where you see action as far as agriculture and rural and all is concerned. Definitely nothing coherent comes out.
I mean, this time when we talk about the budget allocated to Manrega, it was about 61,500 crore, which is up from 60,000 crore, which was in July. But if we were to compare it from last year,
the revised estimate, I think, was about 70,000 crore or something.
71,000.
Yes, 71,000
So what is the reason for these allocations decreasing?
See, I think overall it is a budgetary constraint. I think the Prime Minister, Mr. Narendra Modi, was very clear that the fiscal deficit cannot exceed 4% of GDP. He was not willing to do that. So because of that, I think many of the big ticket items, you won't see more allocations, So whether it is a PM Kisan, whether it is MG Narega, all the flagship schemes, I think they have gone slow on the whole thing. Though probably it can be argued that if you were to spend more money on MG Narega or on PM Kisan, it will definitely create a bigger stimulus than maybe even infrastructure. Because if you give money to a poor person or a relatively low income person, that person is more likely to spend it immediately, So to stimulate consumption, that would have probably been the best way out.
I just want to point out to our listeners that MG Manrega basically guarantees at least 100 days of employment to adults of every rural household.
Yes, that's right. Every family is assured of 100 days of employment at the minimum wage kind of a thing. So I think there's not been much of a step up in outlay. And probably for that, you have to look at the macros. I think the macros were very clear. I think it was a political call not to increase the fiscal deficit much. So because of that, obviously, so all these programs, they have suffered. But I'm more intrigued by what they have done in the case of the subsidies and this kind of a thing. So it would be interesting to see what happens off budget, once the budget session is over. Like, what are they going to do, for example, with the crop that is now going to be harvested after April, the wheat crop? I think it's going to be a super bumper crop this year because the weather has been very good. There's enough availability of water. It's been a very chilly winter. So I expect wheat production to go up definitely maybe to 115 million tons or something. So are you going to procure that entire grain? Because if you were to procure, I think you will end up procuring about 40 million tons. The crop is so good. At the same time, your food subsidy bill is lower compared to last year. So somewhere it doesn't add up.
So what are the kind of things that when we look at the kind of distress that the rural economy has been going through, what are the kind of things that you think the government can focus on now, or you think the budget should have directly addressed?
See, I think in the budget, if they had announced something to the effect that from now on, all stocking controls are to go away, all export controls are to go away, an announcement of this kind that, save in the case of an extreme national calamity or war, controls will not be imposed. I think there would have been a lot of credibility in that kind of a thing. So even if you don't do anything, the very announcement that, we want to liberalize the sector, we want investments in the sector, we look at rural areas as a place where we want to attract investments. I think Modi government has been very aggressive when it comes to infrastructure, very rightfully so. So they've given all kinds of SOPs, right, including for sovereign wealth funds, all kinds of tax exemptions and all. If that same intent had been shown in agriculture, and I think this would have been just the right time, because we are going to harvest a bumper crop. I think after April, you're going to see a lot of new crop coming in. I think the last monsoon was very good, especially in the tail end, So I think this would have had a lot of impact on sentiment and all these things. And I have been maintaining right from the beginning that, this slowdown started in rural India and it can only end in rural India. I think this is something they could definitely have announced. And also, I think something on the subsidies, it would have been worth announcing these kind of things. See, if you are saying that I don't have money, I don't want to splurge, I cannot expand, then at least you should announce some kind of supply side reforms, right? Which won't cost you anything. If you say that I'm going to free the agriculture markets, I'm going to allow farmers the freedom to sell anywhere to anyone, and just that statement, it would have made a lot of difference, I think, to sentiment and everything, especially now when prices are sort of recovering. I would say that crop prices have sort of bottomed out, So it would have created a lot of sentiment, and I think it would have made a difference. And to that extent, this opportunity has been squandered. And you end up with all kinds of announcements, and a coherent vision is what I think the budget lacks for rural India, of course, but overall also.
You were listening to Three Things by the Indian Express. Today's show, as always, was edited and mixed by our producer, Joshua Thomas. If you like the show, then do subscribe to us wherever you get your podcasts. You can also recommend the show to someone you think will like it. Share it with a friend or someone in your family. It's the best way for people to get to know about us. You can also tweet us at Express Audio and write to us at podcasts@indianexpress.com.